Hello everyone, and welcome to episode 2.2 in the Investing for Beginners series. We're going to take a look at the balance sheet of a company and learn some of the most important terminology that you need to know in order to understand the investing field. This is Apple's annual report for 2014. Basically, it's a long 100-page document that includes information about the core business, as well as nearly all financial information about the company over the past year. We'll see that there are numerous vocabulary terms used to describe the financial state of Apple. Every public company in the US files these types of reports, either annually or quarterly. To find them, just search the company name up and add the words Investor Relations at the end. For most companies, the appropriate documents can be found under the SEC Filings tab. A 10K is the annual report, a 10Q is a quarterly report, and an 8K is a report that a company files to detail any type of important major news. Let's take a brief tour of Apple's annual balance sheet. You'll see the first page is a title page, which just contains the company name, address, and registered exchange. Below that, there's a table of contents where you can get a preview of the entire document. While many of the items on this list are not very important and are just here because the Securities and Exchange Commission requires it, the financial items can be used when researching for stocks. In Part 1, we can learn about the company business, products, and goals. Since this is Apple's 10K, we get explanations about the iPhone, iPad, Mac, iTunes, and more. After descriptions of the products and services, there's a list of risk factors that are associated when investing in Apple. It's quite a list, and most of it is quite obvious if you think about it. All of this is the boring information until we get to Part 2. Now, the financial information regarding the previous year are going to start to appear. We begin with the stock price and the various ranges that it was within over the previous year. We see information regarding shareholders, dividends, and purchases. Now, from item 6, we see the selected financial data, meaning the preview of the meat of the document. We see the historical performance of all the data, in this case from 2010 to 2014. I'll also add that every number, except the number of shares, are in millions. That means if the net sales figure of $182,795 actually means $182.795 billion. When researching for stocks, this is the area that investors look at to gauge the financial health. Net sales, or revenue, is the total amount of money that the company gained through selling products and services. Net income, or profit, is the amount of money that the company gained from the sales. Earnings per share is a ratio between the net sales and the number of total shares outstanding, and that tells you how profitable each share was. We see cash dividends, which is simply the extra amount of money the company gives to shareholders. Not all companies provide dividends, but Apple, since it has so much cash, has more than enough money to give back. Next, we have some information about the total amount of cash that Apple has, as well as assets. I'm sure most of you know what assets are, but I'll explain it just for sure. Assets basically are anything that the company owns or something that can be listed as a benefit for the company. Apple's assets, as you can see, are valued at over $231 billion. That's a lot. Long-term debt is pretty much self-explanatory, because it's the amount of money that the company owes to others over a long period of time. Liabilities are the opposite of assets, meaning that they are counted as things that can hurt the company in the future. Finally, shareholder equity is the amount of money that shareholders have given the company when they buy stock. As we go lower, we see the net sales figure mentioned earlier broken down into specific regions of the world, as well as by product. All this information can be interesting to read through in your free time, but for now, I'll just breeze over them. These figures are mainly used by investors who like more technical data to make trades, because you can tell exactly how much money is coming from each part of the business. From there, you can use that to gauge how much each section of the business will grow over time and decide whether it's worth investing in or not. Now, we come to gross margin. This is an important metric that's used commonly by investors to see exactly how big of a percentage of the total revenue the company is profiting from. The higher the gross margin, the more money the company is retaining. Apple is one of the highest gross margins around because they're able to sell expensive devices in massive quantities, which is typically contrary to economic practices. Next, we see some information about the operating expenses of the company. Apple has broken it down into different sectors, including research and development, administrative, selling in general, and finally explained how much it impacted the overall net sales. Finally, after some less important numbers, we come to the actual meat of the document, the consolidated statements. This part of the document is an investor's dream because it's filled with numbers. Unlike most of the numbers we saw previously, these are actually important and they're used in everyday calculations. So if you've been sleeping for the first part of this video, now is the time to wake up and listen. We've gone through quite a few of these already, so I'll just fill in some gaps. The cost of sales is the cost of the production of the goods sold. Expenditures to suppliers, for example, would go into this item. We see the double underlined net income figure, which again is just the total profit. Now, as we get into the consolidated balance sheets, we know that they talk about assets, liabilities, and equity. Current assets are basically assets that came about in the last year or so. Obviously, there would be a lot more assets than current assets, since assets refer to the entire history of the company, while current assets refer to only the past year. Short-term marketable securities are investment mechanisms, like stocks, bonds, and derivatives, that the company itself owns and can sell at any time. Just like how an individual investor can buy investments, companies can and do as well. Accounts receivable are essentially the amount of money that the company can receive from customers at a given time. For example, if a customer says that they'll pay the price for their new iPhone later in, say, a month, then the value of that rain check will go under accounts receivable. Inventories are pretty obvious. It's just the value of all the unsold iPhones and iPads that Apple has sitting in their factories. Then we get into the traditional items of how much their buildings and equipment are valued, their goodwill, and intangible assets. Goodwill is intangible, meaning that you can't really put an exact numerical amount on the value of it. It's simply the value of the company's brand name, patents, customer loyalty, and stuff like that. From assets, we move into liabilities. Accounts payable are the opposites of accounts receivable. If the company has promised to pay one of their suppliers at a later time, then that goes into accounts payable. Accrued expenses, surprisingly, are the total expenses that the company has accrued over the past while. Then we see the total current liabilities, and information about shareholder equity. Like I said earlier, shareholder equity is just the amount of money that shareholders own through stocks. Equity means ownership, so shareholder equity is shareholder ownership. From there, you can see a lot more numbers, which are all extremely exciting, but beyond the scope of this already quite lengthy video. In most cases, if you read a 10K or 10Q by yourself, a lot of the information is self-understandable. For example, if you see the metric share-based compensation, then you can safely assume that it means how much company employees are paid through stocks. However, lots of the information provided in these documents are simply superfluous for us investors. We really only care about the revenue, sales, gross margin, assets, liabilities, dividends, mostly the stuff that you found in the introductory selected financial data section. In fact, when you're looking at an annual report, I advise you to mainly stick to that section with maybe a few looks at the consolidated balance sheets. Everything else is only useful for the SEC or the various financial companies that try to look cool. For everyday investors like you and I, those condensed sections are the best. So I hope this video provided you with a good overview of the balance sheet, as well as some of the major terminology that is found in business. See, it's not very difficult. Now that we know what each metric denotates, we'll learn more about how to apply those numbers to decide on what stocks to buy in a later unit. For now, I'll let the definitions percolate in your mind. Maybe search up a balance sheet or two of some companies that you like, because sometimes your findings can surprise you. I'll give you a research project. We all love Tesla cars, but do you love the business? Pull up the latest 10Q document, and I think you might be surprised by what you find. Anyways, next time, we'll learn some formulas that investors commonly use to combine the numbers you saw today to actually get an idea of how financially stable a company is. It'll be very mathy, so get your numeric minds ready. Be sure to like and subscribe, and stay tuned for the next video. Thanks for watching, and keep making money.